faithfully delivering value, interpreting great books from around the world. Hello, this is Sally's Book Club. Today we're exploring the book Value by Zhang Lei, founder and CEO of Hillhouse Capital. Established in 2005, Hillhouse grew from managing $20 million to 500 billion RMB over 15 years, becoming one of Asia's largest investment firms.
Zhang Lei's personal net worth has reached 28 billion renminbi.
He ranked 188th on the 2020 Hurun China Rich List, with Hillhouse achieving over 40% annualized returns. Their notable investments include Tencent, JD.com, Blue Moon, Cuner, Pinduoduo, Liang Pin Shop, and Bell, all featured in Value. This book is Zhang Lei's literary debut. It chronicles his personal journey while articulating his investment philosophy. Through iconic case studies, Zhang demonstrates how long-term investment principles guide value discovery and creation. Since publication, the book has garnered significant attention, and it's featured in multiple prestigious reading lists.
Value topped Barron's 2020 fall reading list.
Over 40 global luminaries endorsed it, including Ma Huateng, Robin Lee, Ba Shusong, and the late Yale CIO David Swenson. I'll unpack this book in 3 segments. First, Zhang Lei's entrepreneurial journey. Second, understanding Hillhouse as an investment institution. Third, Zhang's value investing philosophy. Let's begin with part 1, Zhang Lei's entrepreneurial path. Born in 1972 in Zumadian, Henan, his father worked in foreign trade while his mother practiced law. As Zumadian's top liberal arts scorer in the 1990s Gaokao, he entered Renmin University's International Finance program. After graduation, he joined Min Metals Group. Though initially without study abroad plans, seeing peers go overseas sparked his desire to explore. In 1998, he received a Yale scholarship for dual master's degrees in MBA and international relations. Upon arriving in America, he discovered Yale's scholarship covered only 1 year, creating severe financial pressure. To cover his second-year tuition and living expenses, Zhang Lei needed a full-time summer internship. After multiple unsuccessful interviews in New York, he reluctantly took a leave of absence. That year, China's internet companies were experiencing explosive growth. After his leave, Zhang returned to China to start a business, co-founding a website called China Venture with an old classmate. This platform served Chinese internet entrepreneurs, became profitable within 6 months, and soon secured funding. But starting in 2000, as the dot-com bubble burst, the site's business dwindled until it finally shut down. This entrepreneurial failure was largely due to macroeconomic shifts. After this setback, Zhang returned to Yale, but still faced financial pressure, forcing him to continue internship hunting. This time, he luckily secured an internship at Yale's investment office, beginning his investment journey. David Swenson, head of Yale's investment office, was a legendary figure in institutional investing. After earning his Yale economics PhD in 1980, he worked at a Wall Street investment bank. He later gave up his high salary to return to Yale in 1985 as chief investment officer of its endowment fund. The Yale endowment dates back to 1718. When Swenson took over, it was valued at $1.03. Over the next 30-plus years, Swenson transformed it into a perpetual growth fund. Despite multiple market crashes and global downturns, the fund consistently grew. By June 2019, it reached $30.03, with 11.4% annual returns over 2 decades. Zhang had attended Swenson's classes but never interacted closely. Their first proper conversation happened during Zhang's interview, since his master's focused on business and international relations. During the interview, he honestly answered, "I don't know," to most investment questions. Yet Swenson still hired Zhang, a complete investing novice, as an intern. Later, Zhang asked Swenson why he hired him. David Swenson replied that honesty is often the most crucial quality. Zhang Lei learned invaluable investment principles from David Swenson that profoundly benefited his future career. For instance, institutional investors need an independent research framework, clear asset allocation strategies, and effective utilization of alternative investments. So, after earning his Yale master's degree, Zhang worked at a global emerging markets investment fund before becoming the NYSE's first chief representative in China. Yet he always maintained an entrepreneurial spirit. In 2005, Zhang launched his second startup venture. On June 1st that year, Hillhouse Capital was born. The name Hillhouse comes from the Chinese idiom "Owl Jian Ling," meaning comprehensive insight with long-term perspective. The English name references a campus pathway at Yale that John walked daily to class. As a private equity firm, Hillhouse's first challenge was gaining investor trust to raise capital. Zhang and his co-founders decided to appeal to overseas investors with China's growth story. Their initial fundraising slogan was, "China is rising, the express train is departing, board it now."
However, Hillhouse initially faced repeated rejections in fundraising. This wasn't surprising since none had been fund managers before.
Among the 5 founders, only Zhang had any investment background. Just as they felt hopeless, David Swenson's visit with the Yale endowment team brought a ray of hope. Despite being prearranged, the Yale team's rapid-fire questions about investment plans and exit strategies overwhelmed them. For unanswerable questions, John's team responded with complete honesty. After leading an inspection tour in China, David Swenson decided to invest $20 million in Hillhouse. This became the first capital Zhang raised after founding Hillhouse. Soon after, Yale's endowment added another $10 million. The following Yale's investment, several other prestigious U.S. university endowments funded Hillhouse. This really traces back to gratitude for David Swenson. Most endowment CIOs had worked under him at Yale's investment office, meaning they were all protégés, personally trained by David Swenson. So, this tight-knit circle of top U.S. university investors helped Zhang overcome Hillhouse's first major challenge. That concludes part 1. With funding from David Swenson and others, Zhang officially launched his investment career. He often states, "I'm first an entrepreneur who happened to become an investor." So what's the secret behind this happen-to venture? Now let's explore part 2, understanding Hillhouse as an investment institution. As founder and CEO, Zhang established a small library at Hillhouse's inception, stocked with annual reports and investment texts. Though initially novices, his co-founders loved reading and excelled at learning. Everyone learned through action. This embedded a learning culture into Hillhouse's DNA from day one. As Hillhouse grew from, dozens to 300 plus employees, it maintained this continuous learning ethos. Both founding partners and later hires became elite investment professionals. So how did Zhang and his crack team approach investing? Hillhouse adopted the portfolio model David Swenson pioneered at Yale. When Swenson took over Yale's endowment in 1985, he found typical university portfolios were 50% stocks, 40% bonds, 10% alternatives. And here, alternatives includes venture capital, private equity buyouts, and real estate investments. Swenson's innovation was massively increasing alternatives allocation, yielding exceptional returns. By 2020, alternatives exceeded 50% in Yale's portfolio. Similarly, Hillhouse prioritizes venture capital in its strategy. This broad VC approach covers all startup stages for equity, while Hillhouse also trades public stocks. He holds substantial positions in A-shares, Hong Kong stocks, and U.S.-listed Chinese concept stocks. You could say Hillhouse is a versatile all-rounder in private equity. Zhang Lei focuses on promising startups, participating across funding rounds as angel investor, VC, or later stage private equity partner. If the invested company goes public later, that investment could multiply dozens or even hundreds of times. And then, take
Beijing, for example.
It underwent 8 funding rounds since founding, with Hillhouse being China's only institution that participated in all and led each. Now listed on NASDAQ and HKEX, Hillhouse has reaped substantial returns. Zhang's most iconic stock trade was his first after Swenson's $20 million investment in 2005, going all in on Tencent. Back then, Tencent had just gone public over a year prior, valued under $2 billion. By February 2020, its market cap had surged to $500 billion. This reflects the market when Zhang wrote the book. By late January 2021, Tencent's market cap peaked at $950 billion. According to Zhang, Hillhouse still holds Tencent shares today. Had they never sold the initial shares, Hillhouse would have gained over 500 times at peak valuation. This investment achieved unimaginable success. Whether venture capital or stock trading, Hillhouse emphasizes long-term investing. This involves fund duration. Lockup periods heavily impact investment strategies. Hillhouse's LPs, like Yale's endowment, provide 10-plus year lockups for private capital. This frees Zhang to invest boldly, unlike open-end mutual funds facing redemptions during downturns that cripple managers. Peter Lynch, author of Beating the Street featured here before, is hailed as one of history's greatest fund managers. From 1977 to 1990, his fund grew from under 20 million to 14 billion, delivering 29% annualized returns. In October 1987, during the U.S. stock market crash, Lynch's fund shrank from $11 billion to $7.02. As a mutual fund company, it served tens of thousands of retail investors. Many panicked by the crash and demanded redemptions. To cope, Lynch had to sell stocks at rock-bottom prices. This taught Lynch that fund holders play a crucial role in a fund's success or failure, a concern Zhang Lei doesn't share. With long-term capital backing him, Hillhouse simply needs to find great companies and be friends with time. Per Zhang's value investing theory, investing has 2 steps: discovering value and creating value. Discovering value means finding exceptional companies. Creating value means expanding the pie together with those companies. How does Hillhouse implement this 2-step approach? That's the focus of part 3. First, discovering value. All Hillhouse opportunities stem from rigorous research. Zhang believes deep research is foundational to uncovering value. His team's uniqueness lies in their proprietary analytical framework. This framework examines 4 elements: people, business, context, and organization. Evaluating people means seeking entrepreneurs with grand visions. For venture capital, assessing people is the ultimate risk control. Zhang considers this more vital than financial controls. Get the person right, and risk naturally decreases. So what qualities does Zhang seek in founders? First, long-termism mindset. Entrepreneurs must uphold their mission, pursue continuous growth, demonstrate foresight, looking beyond daily market fluctuations, and possess championship ambition. In his book, Zhang cites IQIYI founder Gong Yu. To build user loyalty, he endured a cash-burning phase, spending $80 million on a drama that earned just $10 million, but viewed long-term, that move potentially saved the company $200 to $300 million in later competition. Second, profound industry insight. This demands entrepreneurs view industry development through both telescopes and microscopes. True entrepreneurs can spot unmet consumer needs amid evolving times. This captures the lifeblood of major trends. Take Colin Huang, Pinduoduo's founder. Zhang Lei sees him as exceptionally rational. When rationality approaches perfection, it reveals fundamental truths. Huang leveraged this rationality to grasp e-commerce's core, connecting people and goods by boosting efficiency and cutting costs. Thus, he centered on people, aggregating scattered needs into bulk demand, directly linking supply chains to enable low-cost goods. Third, laser-focused execution. Entrepreneurs face constant pressure, requiring total commitment and craftsman-like perfection in details. In his book, Zhang shares Dr. Li Song's founding story with Frontage Labs. In 2003, Dr. Li single-handedly launched Frontage Labs. Back then, one person, old equipment, and a single lab comprised everything. Early on, researchers were severely understaffed. Worse, a lab explosion occurred. With no bank loans or VC funding, Lee mortgaged all his assets to buy equipment. After over a decade, Frontage now has 30,000 plus square meters labs and 700 plus employees. Speaking of craftsmanship, Zhang believes Bull Group founder Wan Liping embodies this in every production detail. Before Bull, Ruan sold sockets in Sixi, Zhejiang, a national hub with hundreds of socket workshops. While selling, she noticed sockets sometimes broke before being sold. With her technical background, Ruan studied socket mechanics, fixing them before resale. Later, she founded her own factory aiming to create indestructible sockets. She enforced strict supplier checks, crystallizing her philosophy: go slow to go far. We're in this for the long haul. Fourth, exceptional empathy. Great entrepreneurs should think from users' perspectives. Better yet, become their product's first customer. Zhang Lei mentions WeChat creator Zhang Xiaolong in his book. He notes that Zhang Xiaolong developed WeChat features primarily based on his own user experience. After evaluating people, examine the business. Does it solve core customer needs? Does its model have a dynamic moat? Take BeiGene, this biopharma leader in targeted or immuno-oncology drugs, operates in high-barrier pharmaceuticals. By end 2019, BeiGene's R&D team exceeded 1,500 specialists. It ran 50 or more clinical trials across nearly 30 regions, with 407 million R&D investment in H1 2019 alone, making it the king. Its cancer drug approved in the US, November 2019, marked a milestone for China's drug innovation. Such companies possess what Zhang calls a dynamic moat. Many startups go through cash-burning phases. Zhang focuses on whether burned cash builds a dynamic moat. Here, Zhang's vision is uniquely discerning. He ignores naysayers. His massive JD.com investment exemplifies this. While Lu Qingdong sought $75 million, Zhang insisted on $300 million, earning mockery as the reckless tycoon.
Why reckless?
Because JD's capital-heavy model seemed unviable initially. But Zhang believed JD could achieve what Amazon hadn't, integrating e-commerce with logistics to solve last-mile delivery. Zhang's $300 million wasn't arbitrary. It resulted from rigorous calculations. Building JD's nationwide logistics network required at least $300 million just for Tier 1 and 2 city hubs and couriers. As JD.com expands its logistics system to Tier 3 and Tier 4 cities and rural areas, it builds an increasingly wide moat. Later, Hillhouse actually invested over $200 million. In 2014, JD.com listed in the US, and Zhang Lei's holdings in JD stock reached $3.09 based on the IPO price. This investment brought both fame and fortune. Next, macro factors like environmental policies, economic cycles, and demographic changes must be considered. For example, Hillhouse's research on the pet market delves into aspects like declining average household size, rising single population, and emotional needs, conducting thorough analysis. Ultimately, all this points to an emerging industry opportunity: the pet market. In this regard, Hillhouse also referenced Japan's pet market development, believing China's is still in its nascent stage. Thus, they invested in multiple pet hospitals and food companies, achieving solid returns. The final aspect is evaluating the organization, meaning the internal culture of startups. Zhang Lei highly values a sports team culture, embodying athletic spirit, competitive drive, courage to fight, desire to win, fearlessness of loss, and team collaboration. Team members should act as sparring partners for each other, not undermine one another. From startup to IPO, every step is arduous. Teams that endure are united and battle-hardened. This analytical framework should be understood and applied dynamically, not rigidly. For different companies, the focus will vary. Through this framework, Hillhouse has discovered many great investment opportunities. Next is collaborating with portfolio companies to create value together. The second step of Zhang Lei's value investing is creating value. Specifically, his investment team at Hillhouse has fewer than 100 people, but his post-investment management team exceeds 200. After investing, Zhang Lei doesn't abandon them. Instead, he supports them from start to finish. There are many such cases, with Bell International being the most classic example. On July 27, 2017, Bell International delisted from the HAKX via a privatization deal. This privatization deal, led by Hillhouse, was valued at 53.1 billion Hong Kong dollars, making it the largest privatization in HKX history to date. After the delisting and privatization, Hillhouse became Bell's largest shareholder, holding approximately 57% stake. From its 2007 listing to its 2017 delisting, Bell, once the shoe king, declined over that decade, and its earlier e-commerce transition was also unsuccessful. After Hillhouse took over Bell, it fully utilized Bell's 20,000 directly operated stores, deploying 120 post-investment management team members to work with Bell's over 80,000 store managers and staff, achieving real-time feedback and intelligent sales under a smart store decision-making platform. In 2018 and 2019, Bell achieved solid growth in both online and offline sales. It's also worth specifically mentioning a sports brand under Bell. Top Sports International listed on HKEX in October 2019, and by March 2021, its market cap had reached around 80 billion Hong Kong dollars. Through this company alone, Hillhouse recouped its investment in Bell's privatization, and Bell's reduction of Top Sports shares on HKEX was also a way for Hillhouse to realize profits. For example, in June 2020, Bell reduced its Top Sports holdings by 270 million shares, cashing out 2.9 billion Hong Kong dollars. From Hillhouse's investment practices, it's clear that they've integrated discovering value with creating value. Now, obviously, the larger the cake grows, the higher Hillhouse's investment returns will be. This is a win-win outcome. At this point, we've covered the main content of the book for you. Undoubtedly, Zhang Lei is a highly successful value investor. When founding Hillhouse, Zhang Lei clearly stated the intent to heavily invest in China, optimistic about Chinese enterprises and entrepreneurs. This aligns with Warren Buffett saying that investors should never short their own country. China's rapid development, since its reform and opening up, is the cornerstone of Hillhouse Capital's success.
Western investors often say that over the past century, it was optimists who led the U.S. stock market to where it is today.
Zhang Lei believes this saying also applies to China. Pessimists might be right about the present, but optimists win the value of the future. That's all for this interpretation. The book notes are below the audio, and we'll see you next time.